All right. Let's see. We got all the socials. We got everyone live. All right, let's get started. Hello, Smart Money 2 podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host. And today I'm joined with Phil Weiss. Hey, Phil.
Hey, Kirk. Looking forward to this conversation. Should be fun.
Funner than it was on Tuesday. Glad we didn't record it then.
Yeah.
But I have to say this week was kind of boring. What were you doing this week? I couldn't find anything. What are we going to talk about today? There's really nothing going on in the world.
I think we're going to really have to stretch to fill up the time today.
Yeah, I think so too. I think we'll be done in about 5 minutes. It's funny. I was having this conversation with Doug, I think like a month ago, and we were commenting on how sometimes we really struggle on what to talk about in this show because there's literally nothing going on in the world, and we're like trying to find stuff that's interesting for the listeners. And that happens sometimes. There are periods of time where it's like nothing's going on, and of course, it's none of that has been when Trump's been elected and inaugurated since, because every day is an adventure. But there are definitely times last year where it's like, well, market's up. No reason, no news, nothing to see here. Go about your business. And like, I don't know what we're going to talk about. But right now is not one of those times.
No.
We've had some historic days, and we're going to share some of those. And the only mistake I made this week was not screenshotting the end of the day numbers for like the FinViz charts that we show sometimes. I wish I had captured each one of those. I'm going to have to go around the internet and troll around and find some, because there are some historic numbers. And we'll obviously talk a lot about that. But Phil, let's before we jump in, like, how was your week? How did you handle this week? Like, what tell us how your week went.
It wasn't as bad as it could have been, because fortunately, it's not like my clients rang the phone off the hook. It's not like I got my inbox flooded with emails. I talk a lot to my clients about the fact it's about the long term. It's about living your life and your plan, and not to get so wrapped up in the day to day. And it seems like that was heard. I did send out an email to clients that'll be part of my blog, because things have changed so much since I sent that out, the way things are moving. And the few people that responded, it was all positive. And it was interesting. When I talk to my clients, the first question they have is, Phil, how are you doing? Even before I get a chance to talk to them about whatever it is that they wanted to talk about. They want to check in on me, because, I mean, it's not, it doesn't feel right sometimes when you look and the market's moving the way that it's moving right now. It's just not normal. It's not what we expect. And we have had crazy ups, we had crazy downs. I mean, Tuesday, I guess it was the day when the market was up, and then it ended up down a lot, and like kind of things that we hadn't seen in 40 to 50 years. And then the rally on Wednesday, I mean, just, we don't see this kind of stuff all the time. No matter how long you do this, there's always something new. I guess that's part of what makes it interesting, right? Is because you never know what to expect.
Yeah, I will say that I was surprised in many ways. Oddly enough, I was not surprised at the drops, the 20% drop plus that we've seen in indexes. I was surprised at the rise, though, especially since the news coming out was positive overall, but temporarily positive. And also, when you take into context some of the companies that were affected and not affected, I was a little surprised at the outcome of some of them. But I'm gonna give everybody a quiz right here, and I'll give you some time between now and maybe halfway through the show to answer it. What is the one investment that has done very well this year? And I don't want you to answer it, Phil,
Okay.
if you know it, but there's one investment that has done very well this year. And if you're trying to look it up, you're not going to find it, because no one is talking about it. Even the people that specialize in it are not talking about it. It is the craziest thing I've ever seen. And if you find it, put the comments in the chat, in your social media thing, or wherever you're listening to this live. Put it in the chat. I'd love to hear it. But I'll bet you nobody gets it. And it's funny, because I watched this investment generally periodically, and it's part of a portfolio I have. I was shocked at how well this thing is doing. And it's had actually has a historic move in the last week that no one is talking about. It's crazy. And the best part is this is a good sign. When no one knows about it, that means there's a lot more to go. So, it's what tends to happen is when you have investments and they get blown up, right? So a stock goes from 10 to 100 and then a bubble hit. Yes. Thank you, Joss. You got it. I won't spoil it for everybody else, but thank you for commenting. You got it. We'll come back to that. Anyone else wants to guess without seeing it? I'll take all takers. So here's the thing: if something goes up a lot, and then it goes down a lot, people ignore it. They're like, it's dead. I'm not going to touch it. And then it just kind of like bounces around for a while at a very low number. And then it starts to climb and starts to come back and it starts to really get its feet under it. And then it starts to take off again. People don't talk about it until it's made a big rise off of the low, maybe like 30-40% rise. Then people are like, oh, what happened? Oh, we should jump on the train. And then the early movers who are paying attention, they jump on. And then the word gets around and then other people and other people. And then it's front page news by the time it's at all-time highs again. Look, it's all-time highs. Oh, we got to jump on this thing. But, and I don't want to use some examples because I don't want to tilt people in one way or the other. But I've seen this in certain assets before, certain investments, where they go through these cycles. And everyone's talking about it and then no one's talking about it. And the thing is if you find an asset that's really good that no one's talking about, that's the time to watch it. Because if it starts to take off, no one's talking about it, you can get ahead of the curve, you can do really, really well. We're seeing that in this investment, and I will talk about it in a little bit. But first, I want to share some history. I want to share some. I've got a lot of snapshots over the last in the last week, and I want to share some of them because some of them were kind of amusing. So we talked about this, I think, last week. Let me see here. Share this window. So here's one of them. This is the money that was lost by the end of last week. Everyone lost. These are all the billionaires. Everyone lost money except for Warren Buffett. He made 12.7 billion in like a year to date. Like, how's that even possible? I don't even know. Like, I don't know how he's making money because he wasn't doing anything special. But this is all the losses people have taken. Elon Musk taken on the chin with 130 billion loss. Bezos 45 billion. Mark Zuckerberg 28 billion. I think we need to go pass a hat around, Phil, to help these guys. I don't see any women on here, so they're all guys. So we got to help these guys out. These guys are really struggling. I mean, I couldn't imagine losing 130 billion. I'd be in my worst house. I'd be. I don't know where that is now. Maybe that's in like San Francisco, but I'd be in my worst house right now, wherever the fires are at. Yeah, that'd be the LA. I'd be in LA in my beautiful house in LA. I mean, what's going on here? Anyway, I just thought I'd throw that out there because I thought that was amusing. Not that they're losing money, but the Warren Buffett made money.
It's funny too about that because everybody was making or giving him a hard time, right? Because when Berkshire's annual report came out and it talked about how much cash he had, and everybody was commenting about all that cash and the fact that he reduced his position in Apple going into this year, and now look.
Yeah.
All those things look smart.
Yeah, it's very smart. I mean, look, he's a wily old guy. He's been around for a long time. He knows what he's doing, whether you agree or disagree with him. And I have things I really don't like about the way he presents himself. I think like most people, he's got a good PR department. It's like good old Uncle Warren. He's this nice old guy who takes care of people and helps them. No, he's a shark like the rest of them. He just has good PR. But I will say that the thing that I like the fact that he's given out a lot of wisdom for everyone to learn from, like one of the best investors of our time. And I don't want to knock him because I want to acknowledge the fact that he is one of, if not the best investor of our time. And so he deserves that acknowledgement. The thing that I don't like is that, some of the things he talks about are somewhat hypocritical, which is, he's talked about capital efficient businesses, and then he went on to buy non-capital efficient businesses, and subsequently his returns have suffered immensely. And so, he's out there and he used to say, well, my goalposts are the 10-year. I got to outperform the 10-year in the S&P. And then once he didn't do that, he stopped advertising that that's the goalpost and he moved the goalpost. So I think things like that are, maybe not intellectually honest, but overall, like, you have to acknowledge he's one of the smartest investors of our era. So I give him a lot of credit, even though I think he's human like everybody else. They all have flaws. So I want to share this. So this is the end of last week. This isn't even this week. This is the end of last week. And this is before some of the other down days and then the up days. This is what it looked like. As you notice, some of the top performers were bond related: Swiss francs, Japanese yen, treasuries, euro, and corn. Oddly enough, well, I don't know, for the week, I guess. The fact it's not down means corn's doing well, I guess. The top loser, oil, basically oil sector, oil exploration, cannabis. Cannabis is always the top loser. I don't know. They came out with a cannabis ETF and they've been the biggest loser like every year. So I don't know if these companies are still in business, but they always seem to be at the biggest loser table. But basically, the biggest losers are energy, right? As some of the top losers: semis, airlines, metals, copper. Then you've got the Dow, which, like I said, this didn't include the worst part, but year to date, NASDAQ was only down 17. I think it got worse. I think it was like 21 or something like that at the worst. But anyway, this is the end of last week. You look at the top performers, the worst performers: energy did poorly, technology did poorly, financials, micro caps didn't do all that great. You've got in certain industries, you got the worst performers: oil, once again, semis, regional banks, cloud, robotics, aerospace, defense. The best performers: healthcare providers. Not sure how that happened. There must have been one company that did really well. Food and beverage. Here's something interesting. I'd love for somebody to pull up the Dow 30, and find like one or two companies that did well in the last few weeks. I was looking through this the other day and I noticed there was a company there. And if somebody wants to put on the chat, I'll give you some brownie points. There's two companies that basically didn't budge over the last week. It did a little bit, but yeah, it was like 3%. Two companies that didn't really budge, and they're both in food and beverage. I'll give you a hint. You can probably guess without even looking them up. So I was kind of shocked. I was looking at stocks to buy and I was like, wait a minute, why didn't these budge? They're close to all-time highs and they're barely moving. Like, what am I missing here? And so I bring this up as our example for today, as our kind of trick for the day, is when you have big sell-offs, look for the ones that are not selling off. What that means is those are the cleanest dirty shirt. And so it doesn't mean they're not going to go down, because if I think Trump timed it well with his announcement, because I think if he went any further, we could have had a crash. Things were getting a little dicey. But when you look at these companies, and by the way, Phil, you get brownie points too if you figure out what these companies are. I'm not holding you to a different standard here. But anyway, so when you see companies that are strong in the face of weakness, those are companies you want to keep an eye on, because what that means is people don't want to sell them. And they also, most likely, not only are they withstanding the pain, but if they do sell off in a crash type of scenario, you probably want to pick them up, because and these two companies specifically are they probably should be impacted by the tariffs, but I'm not sure, because I haven't dove deep into all the companies and how they're impacted. But it's just something to keep in mind. If you have a boom and you have companies that are not keeping up, that's a good idea to keep in mind. If they're going into a crash and companies aren't crashing, that's something you want to make note of. So you want to look around in crash type scenarios and look for the best performers. In this case, like healthcare providers, it was only down 1.64. Interesting. They're up for the year. They're up 7.25% for the year. Wow. Gold miners up 23% for the year. Interesting. Huh. maybe I should pay attention to what's going on in those areas. So that's if you know nothing about investing, if you know nothing about fundamental analysis, if you know nothing about these companies, look for strength in the face of weakness. It's a great indicator of where you should be paying attention. Now, it doesn't mean, like, if you look here, like gold miners are up for the year. They're up close to 23%. They were down like 8.5% last week. Okay, well, they got creamed, but for the year they were doing well. So the point being is, yes, you're correct, Phil. You got the two. So I'll share since Phil finally got them. I know Phil knew he was just being nice. But we were talking about McDonald's and Coca-Cola. So I was looking through my list of stocks to buy, last week, and I'm like going like this. I'm sitting here like, excellent, like Montgomery Burns. And I'm looking at this like, all right, what can I pick up? And I look at these two, I'm like, huh, that's weird. I also realized something that nobody talked about. Phil, if you had to guess, what would you guess that Walmart returned as a performance last year? What do you think it returned?
Wow. It's not one I follow closely. I'm gonna guess it was up 10 to 15%.
I'm gonna shock you. It was up 77% last year.
Jeez. I didn't realize it was that much, that's for sure.
I didn't either. So I was looking at stocks and I was like looking at all like the big names, and it started around $52 the beginning of last year and ended up right around like 90, 92. Like what? Like what? Like why would Walmart be up that much? It didn't make any sense to me. So my point is it always makes sense to kind of look around at stocks and see what's going on, like, and see what's happening, how things are reacting to news. And you want, like, I don't expect tariffs to go away. They're paused for 90 days. It'll give people a chance to, like, have their powwow and negotiate stuff, which, I give Trump an A+ for negotiation. I mean, what he's doing is brilliant. You guys might not like him. You guys might not appreciate what he's doing. You might not like the way he presents himself. He's this boorish character that's just, oh, he's so uncouth. I couldn't see myself voting for him. Get over it. Like, what he's doing is brilliant if you see through the politics and the rugged, I don't call him rugged, but the veneer that he has that people don't like, the orange veneer. What he's doing is brilliant. He's a brilliant negotiator. And if you want to learn about negotiation, just watch what he's doing. It's really interesting. So I won't get into all the technique of what he's doing, but point being is he's given everybody an out, and he's given people a time to breathe. He's still going hard at China. Like, it's hard to follow the news because I don't know where to look anymore, because the news isn't on like news stations. Now it's like Truth Social and like this place and that place. So I'm finding it hard to even follow this stuff sometimes. But anyway, so you need to watch these companies and see how they performed in this environment. And then if you find strong performers, say, all right, I need to watch this. I need to pay attention because there's something going on here that's not going on elsewhere. Right? Look, I mean, you've got two sectors, two industries that are positive for the year, and they're positive strongly. There's some that are doing okay, like insurance is only down 2%, which is fine. It's basically, fixed income. Social media is okay, but mostly companies are getting blown up. So it's just important to look through these companies just to see what are the outliers. Here's the size. We're not seeing much difference. They're all getting blown up. Size doesn't matter in this case. Just like all the men tell you. So, or actually the women tell you. The women say, oh, size doesn't matter. Anyway, I don't want to get into that. I want to keep this G-rated. So these are the factors. The factors aren't really doing well. Low volatility is doing okay for the year, which is maybe that's the outlier that we're looking for. The low volatility stocks are doing better. But otherwise, they're not seeing much difference. Alternatives like preferreds, hedge funds, they're all getting blown up too. I don't know what Destiny Tech is, and maybe that's Kathy Woods, but they're down 44% this year. But basically, a lot of these like outlier kind of ETFs. Now you got fixed income. We got a different color here, huh? This is all green, with exception of senior loans and high yield. High yields tend to be a blend of fixed income and equities. So I'm not surprised. I'm actually, the one thing I'm surprised, well, actually, this is last week. So munis got decimated in the last week. So I'll show you that chart in a little bit. But it's interesting to look through this and see how everything's performing. I don't see preferreds on here either. That was on the other sheet. And then the last one, you got major commodities, agriculture. You've got different commodities. You can probably guess here from this what is the thing that's done well. And it's not natural gas, which actually is up 19% this year. That I was a little surprised at. But I'm going to share it's gold. The surprise answer is gold. So congratulations, Josh. You got the prize. Your check's in the mail. But basically, gold is the surprise investment that this year no one is talking about. I hate to say it, no one is talking about gold. And I hate to say it because I don't want other people to realize what's going on. I want to buy more. But here's a chart. I'm going to share this, and then we'll get back to the rest of the results. Gold posts its highest daily close in history recently. And here's another record breaker. It was up $100 in a day. $100. Now that was like 3% move now because the price is high. $100. No one's talking about it. There's gold bug sites where literally all day they talk about gold and how awesome gold is. Even if gold's dropping 20%, gold's the best. You got to buy gold. Everyone's gold all the time. You skinned your knee, put gold on it. It'll be great. It'll make you feel better. Like that's these people. They weren't talking about this. $100 move up in gold. No one said a thing. No peeps. What is going on? I love that. And all you listeners, I don't want to tell you what to do. This is not financial advice. Do not take my opinion because, you could do whatever you want. I'm going to be going out and buying gold hand over fist here. I mean, if literally this is going on, no one's talking about it. Gold is in the biggest bull market that we've seen in a long time. And we've seen two in the last 25 years to one historic bull market. And if this is going on, I don't know. Let's put it this way. I'm not going to say I'm going to buy or sell. I don't own enough. That's all I'm going to say. I do not own enough gold at this point because this is not a chart you're going to see anywhere else in the stock market or bond market. It is in great shape right now. And if everyone was talking about gold, I'd say, well, maybe we shouldn't get involved. But the fact that no one, including the gold bugs, except for maybe Peter Schiff. I mean, I think literally he wakes up and the first thing he says, he's like, "Good morning, gold." Like instead of his wife, he probably says good morning to gold. Like he's weird. But anyway, I think everyone else probably isn't even paying attention to this. And why wouldn't you be? Everything's cratering around you and you can't find the one shining thing or two. I just noticed natural gas is up a lot too. The two shining things in markets that you can make money. I would be paying really close attention to things that are up for the year so far as of last week. As of this week, things are different. We're going to get into that. But anyway, I don't know. What are your thoughts, Phil?
So I think that when you said it, I did think of gold, but I know it's not something I was paying attention to. I just didn't think about it.
That's all right. I wouldn't have called you out. I would have, I'm sure.
Yeah, I mean, the way you described it, that felt like what the answer is going to be, but I didn't know. But the thing that I would like to follow up on what you're just talking about, like when you're talking about the food and beverage companies, I'll go a little bit further than that. The other thing that I look for when you have markets that are uncertain like this is you want financially strong companies. And that helps a lot too, because they're the ones that are the most likely to survive when times get tough and they come out stronger on the other side. So that's definitely a place that I think of looking when we have a difficult market. And I mean, it's so crazy this week. I was telling you before we got on, I had a client that gave me more money to invest and wanted it invested. And I put it into the market on Tuesday and Wednesday. And fortunately, I finished before the market took off. And so I bought stocks during the day that closed 10, 15, 20% higher than what I bought them at. And that's just not the kind of thing that we normally see. I mean, I was happy that I did it before, because I obviously didn't know what was going to happen that day. But it was just, I mean, that's just how crazy it is. Like that, normally when you have stocks that are established companies that I was the kind of companies that I was buying that do that during the day, it's because they release good earnings or something like that, or there's major news. But there was no company news, and it wasn't like I just focused on one sector of the market. I bought companies in a lot of different sectors, and they were all up. And like I said, the majority of them were up 10, 15, 20%, which is just not the kind of thing that we're used to seeing at all. But those companies, like I said, I look for strong companies when the market's uncertain in particular. And they were all strong, financially strong companies. And I think that does make a difference too.
Yeah, I mean, look here. So I'm sharing a chart of Coca-Cola, and this is not investment advice. I'm using for illustrative purposes. But if you look at Coca-Cola, right, it went down after the election and then jumped up in February. I don't know why, because I don't follow Coca-Cola. But if you look here, we had last week. I think it was last week. It dropped a lot, or maybe it was this week. Yeah, it must have been this week. So it dropped a lot and came back up. But if you look prior to that, nothing happened. And it's like it was probably like a day because, like I said, I don't have it in front of me, but it's probably like a day. Actually, I'll tell you exactly what happened. Here's the daily. So here's what happened. You had on the 4th, it dropped, and then the 5th, it opened lower and then started to bounce. Okay, I mean, it was an interesting week. Say what it is, an interesting week. But look, I mean, this is Coca-Cola. I mean, it's really strong in the face of Armageddon. I would call it. And then the other one was McDonald's. So let's look at McDonald's. Look at this. What is going on? Like in February to today, nothing has happened. It's like people who own McDonald's woke up and didn't watch the news for like the whole last 2.5 months, which is great. And so my point is, it's not that this is a great stock or not that you should buy or sell. It's that this is the kind of thing you should look for and say, huh, isn't that interesting? Isn't that interesting? Here's the monthly chart. Just keep up, down, find a dip, buy it, goes up, find a dip, buy it, goes up. It's interesting, right? It's interesting that this is what's going on. It seems to be an uptrend. This is something you might want to keep an eye on. Now, with a PE of 27, I'm not sure I'm in love with the stock, but I'm not sure how cheap it's going to get, right? It's like some of these old blue chip companies that are staples that are really never going to go away. Like people aren't going to stop shopping at Walmart, right? It's just not going to happen. People aren't going to stop going to McDonald's or buying Coca-Cola. I mean, they should, but I wouldn't eat that stuff. But people eat it, and they eat it around the world, and that's not going to stop.
And
go ahead.
Like the other thing that, as you're talking about McDonald's, that I'm thinking about, like, so how is McDonald's affected by tariffs? Maybe not that much, right? Because they have to source if they're selling food,
it's all local.
It's local.
Yeah.
And I don't eat that food either, but I remember there was a time in life that I did. And I remember my wife and I being in Italy, and we went into McDonald's just to check it out. And the food, even the menu that they have, isn't the same as it is here. So I can't see McDonald's being as impacted by tariffs as a lot of other companies because they have to source things locally. It's not like they're importing most of the food that they sell. It has to be local because it's got to be able to keep fresh, and they have to. You can say what you want about McDonald's, but at least you got to think that the food is fresh.
Did you know that Coca-Cola, I believe we're the only country in the world that sells Coca-Cola with corn syrup. Everyone else uses sugar.
So yes, I do, because here's something else that's really interesting, because Passover's coming. It starts tomorrow. And if you go into the supermarket right now, they sell Coca-Cola without corn syrup because for Passover, you're not supposed to eat corn.
Interesting.
And so to allow the Jews to buy Coke, they sell it without the corn syrup. But what happens is it all sells out because other people want it without the corn syrup. And so it's not just the Jews that buy it, everybody else does, but they know every year when Passover comes, the US market, they sell Coca-Cola without corn syrup.
It's so crazy to think that the consumer's not right here, that the consumer's not demanding this more. I mean, really, it's you see these comparisons. I know there was I think it was RFK did this video of like Fruit Loops, or maybe it wasn't him, it was somebody else. But it was basically Fruit Loops in Canada and Fruit Loops in the US. And it was a blind taste test. And you said, which one do you like? And it was a Canadian version. Why? Because it's made with actual fruit. Like the coloring is fruit coloring. It's not food coloring, which we use here, like poisonous food coloring. And people liked it better, and yet they don't sell it here because the law. I won't get into the politics.
It's the same thing with if you go to Europe and you buy chocolate.
Yeah.
It also doesn't have trans fats in it.
Yep.
And it tastes different. It tastes better. But our market, they let them get away with it. It's cheaper to make it and sell it with these artificial products or manufactured products, whatever you want to call them. So we sell it that way, but you go outside the US and they don't.
Yeah, it's an interesting thing. I remember going to Italy. I can't have gluten. I can't. My body doesn't like it. But when I go to Italy, I can have as much gluten as I want, and I'm not affected. It's not. This is an interesting thing I heard. I was listening to a podcast. This on the health track, but I was listening to a podcast last summer, and the guy was great. His name's Dr. Datis Kazarian, Dr. K. And he's done a lot of. He's a researcher, so he's not like one of these, Instagram health gurus. He's actually a medical researcher, so he's done a lot of research on this stuff. And what's interesting is looking back, they actually changed the nature of gluten. I forget when it was. It was like the 70s. They changed the nature of it, so it's a different grain now. And you actually, because I know Europe doesn't allow GMOs and other stuff, but here it's different. So I have issue with the gluten here, but I don't have issue with the gluten there. So what a lot of people here do, they have issues with gluten, but it's not the gluten. It's actually the US version of gluten. Fascinating stuff. But when you start to get in the weeds in this, getting back to your point, Phil, you're right. I think this is the issue: is they're not shipping anything. It's all sourced domestically wherever the McDonald's is. And Coca-Cola has got bottling plants in different countries. They don't bottle them here. So I think that's probably the answer. But it's interesting to note that there are investments out there that are not getting severely impacted. Most of them are. And just to be crystal clear, we talked about this in the show before. When you have a PE of 34 and it drops 50%, you get to the historical average. We might have more to go. I do want to share this little bit of wisdom as well, and then we'll share some more charts. When you're looking at the S&P 500, let's see if I can bring it up here. So if you're looking at the S&P 500, there's this. Is this going to show me? No, it's not going to show me. Okay. All right. Well, I can't get the chart up, but basically if you're not familiar with what is called the 200-day moving average, the 200-day moving average is basically a line that you take the average of 200 days and it gives you the price. So if the market's going up, the 200-day moving average will be below where the price is. The market's moving down, will tend to be above. And there's this old school rule of thumb, which is nothing good happens under the 200-day moving average. So as long as the S&P 500 is under the 200-day moving average, you shouldn't be in the market. That's just the rule, right? If it's above, be in the market. If it's below, don't be in the market. If you do nothing else, that's all you need for a rule of thumb. You don't need to know anything else, just that. And you could be a successful investor too. I mean, it's so simple and people try to overcomplicate it, but there's so much truth to it. And yes, of course, sometimes it bounces below and then comes back. But the reality is that's small potatoes. If you were just in it when it's above, you do just fine. That's looking at historical numbers, and obviously, everyone makes their own investment decisions. But I think it's important to note that. Now, I do want to. Whoops, I didn't share this. I do want to share a few more things, and we'll get to Phil's got some stuff he wants to talk about. But all right, so here is World. Now, what's interesting is we talked about this a few weeks ago before the quote unquote crash. I wouldn't call it a crash, but crash-ish. And the global markets are actually doing well. They're not now, right? If you look at year to date, Mexico's up 6.5, Brazil almost 9, Spain up 15, France, Switzerland, UK up 2 to 5, Germany almost 8, Europe 2.5, China 7.5, Italy 7. Everything else is red. Now, of course, they're all red now, but that's still year to date. That's actually after all the sell-off. They're still green. So what you should also pay attention to, because we've been talking about it in the show, international markets could be outperforming the US this year. You've had an interesting time where you can actually potentially make money in international right now by buying in cheaper. Not saying you should, just saying if you think Europe is strong, which is indicated here, it is. If you think Europe's going to be strong moving forward, now is actually an interesting time to look at it for your portfolio. I'm not convinced. I actually don't like Europe. I think they're a little too lazy. It's what do they say? Europe is basically a museum that markets itself as an economy. It's just different, right? It's a different culture and all that. They're not really innovative like we are. They have different rules and all that. So to see them actually doing well is interesting. So maybe they'll do well, maybe they won't, but it's an interesting thing to take note. Here's another thing to take note of. We're going to talk about this in a minute, is currencies. What have been the best performers? Swiss francs. They're always a very stable currency. The Japanese yen tends to be a flight to safety. So if people are freaking out, they go to the yen for a bunch of reasons. Won't get into them because I don't agree with them all, but that's what people do. So you just have to go with it. And the euro. So there's a lot of currencies are doing well in comparison to the dollar. Dollar year to date was down 4%. It's actually done worse than that since, which we'll talk about. And then last one's crypto, which obviously has done reasonably well and also not well. Ethereum has not done well this year. Bitcoin has done reasonably okay considering. I know a lot of people are wondering, why is crypto going down? It's a flight to safety, blah, blah, blah. It's it's going to protect you against inflation. I think we can clearly tell from that crypto is not going to protect you from a crash. And I would have told you that before. Like, it is not. Actually, if you want some wit and wisdom from somebody like myself, I've been through this a few times. Nothing is safe in a crash but cash. Cash is the only thing that's safe. Gold in 2008 it dropped like everything else. It just happened to come back before the end of the year, so it was a positive for the year. But during the crash, it did not protect you. COVID did not protect you. People couldn't buy gold coins. If you called a dealer and said, I want gold coins, you couldn't get them. They were out. And yet gold prices went down. How does that happen? Supply and demand? No. So just be mindful. If you're worried about a crash, go to cash. It's the only thing that's going to keep you safe. Short-term treasuries are okay too. I don't get into the currencies. Maybe other currencies are fine, but if you're U.S. based, wherever you are, stay in your own currency. That is as safe as you can be, given the circumstances. Obviously, 2008 was weird. You didn't know if your cash was safe, but withstanding that, that's the place to go to keep yourself safe from losing money. And just wait, right? You don't have to be invested in equities. Just wait. Wait for opportunities and then buy back in. But it is one way to protect yourself, the easiest way, because then you don't have to take a lot of risk and stay up at night worrying what's going to happen. All right. So I want to share this chart of the US dollar, and then I'll go back to Phil. All right. So this is a chart of the US dollar. Now, if you notice here, from 2017 to 2022, early 22, it was pretty much sideways. There was a range. There was a range from about 100 down to about 90. That was the range. From 2020, from right around 2021 until, let's just say from 2021 on, the range went from 90 to 100, went from 100 to 115. And it's basically been bouncing around from 106 to 100 for a while. Right now, as of today, it is below 100. So the question you have to ask yourself is, are we in a new regime change? Does this mean the dollar is going to keep declining? What happens if it keeps declining? Does that mean more sell-offs? Does that mean that people start losing money in currency markets? Don't know. I don't know how everyone's positioned. But it's something to keep in mind when you see a range break in a currency. You have to be mindful of this because there are a lot of interrelations in the markets. I don't know if you remember, Phil. You remember when the Swiss franc broke from the euro, and they had, I think it was night trading that went under.
Yeah, I
They
think
were
that's
over
right.
leveraged. So basically, what happened was this trading firm, there was a peg against the euro with the Swiss franc, so they weren't going to go below a certain number. And what happened was is they couldn't hold it, so they actually broke with the euro and said, It's getting too expensive. We're going to break this," and people were caught off guard, and so they lost a lot of money. At least one firm went bankrupt. I think this was back in 2014 or 15 or something. Maybe it was 17, but it broke, and so these firms went belly up because they were all assuming that they would not break this peg. So be mindful. There's things like that come out. I know there's been rumors of hedge funds and other firms that are over leveraged long, and they don't want to take a loss and they're hoping it comes back. Maybe that's the case. I don't know. I don't have any proof one way or the other, but I'm assuming that we're not out of the woods yet. When we get above the 200-day, I'll call it all clear. But right now, I think that we potentially have more pain ahead until China and the U.S. stop saber rattling. I think anything's game. So I would just say just be careful. Be careful out there. um, don't take big risks right now because just because you don't see the sharks doesn't mean they're not in the water. And right now, I think we saw that this week with the big sell off and the big bounce. I'm just going to show this just for let's see where it is. Let's see if I can find this. I had all these charts here, and here's some of the one. No, this is not. That was a treasuries. All right. Well, while I look for this, here it is. Biggest. I'll share this because we're talking about all the bad stuff. Here are the 10 biggest single day return for the S&P going back 100 years. We are number 10, a 9.5% up day on April 9th. And the best one was 16.61% return in 1933. The rest are double digits for the most part. 2008. So anyone who tells you like, oh, well, you missed the 10 worst days. If you missed the 10 best days, yeah, these were 2008 in October. Those were followed by some of the worst days. So don't let anybody pull the wool over your eyes. Go
Yeah,
ahead.
that is the one problem with that. Like, I understand that theory. I know why people like it, but you have to look because sometimes those really good days are right around a bunch of bad days because
Yeah.
there's like people feel like it's gone too far and they go by, things go up, and then it comes right back down. So it's not always. So while I understand the approach, and I don't really like to trade in and out personally, but that is something that happens. Is that those good days are really right in close proximity to the bad ones.
Yeah, and I mean this is an obvious example. October 13th and 28th, the markets went up 11.58 and 10.79%. That's a lot. However, I don't have the numbers here on this, but if you looked at the 10 worst days, I can almost guarantee that somewhere around these few weeks, you're going to see bad numbers as well.
Yeah.
Now, keep in mind that the market's down 20% right before the S&P went up 9.5. So it's not like, oh my God, they just had a really great day. No, the market was way oversold. One of the quickest, I think it was even quicker than COVID, the market crashed. So I don't want to call it a crash because it didn't feel like a crash. It was a fast moving train wreck, but it was definitely not a crash because we can't say that word. But look, I mean, here are some examples. Like here's the S&P. You had basically April 3rd or 4th. You had a big drop, a bounce, and then a drop, right? So this is all a mess. This is a big mess in here. But this is what happened. So the reason you had this big up day is because it started up here and then it went all the way down here. Even in the recent time, it still hasn't come back to where it started. So the thing to keep in mind is at this time where it bounced, we were oversold. And what that means is we went way too far, way too fast. Now, markets tend to oscillate, and there's a lot of science and magic behind this. But basically, if you look at a market, it generally will not move too quickly in one direction without it going back in the other direction. So it's kind of like we talked about this, I think, a few weeks ago, reversion to the mean. There is like a mean, right? So if you look at this chart, the mean was like right in here. It's like if you just take a cross section, say, all right, cut a line right through the middle, that's the mean, right? So if you look at this, it doesn't really fluctuate too far from the mean. They're all pretty similar. But let's say it starts to bounce really far away from the mean, right? Because generally it should have gone to here, but it didn't. It went down to here. Well, what happened? You got to bounce back. There's some relief. And say, oh, there's a rally. It went back to the mean. Then what happened? It fell apart. Well, that's too fast. So what happened? It bounced. And then it'll take some tension off, and then it'll go again. So the reason the oscillation of the markets is important is because when you see these moments, it's a great time to put some chips on the table because it happened too quickly. Same thing happened during COVID. Happened really fast. And then it hit a bottom and and people were just buying. People were like, whoa, too fast. We got to buy in. And then it bounced, went back, and then it took off. That's normal. That's very normal with these kind of markets. So you have to pay attention. You have to see, and when people say it's way oversold, pay attention to that. Not many people talk about it. We didn't talk about it on the show. I've been following it. We didn't say it. But that is an indicator of a short-term buying moment. So what do you got, Phil?
So I could say, I agree, but that's definitely a market construct more than it is like if you're looking at individual
Correct.
securities. Because like, I love there's an old line, I think it's from David Einhorn. He goes, what is the stock that's down 90%? It's a stock that fell 80% and got cut in half.
Yep.
So
my favorite
when
quote.
you start to get, yeah, it's a great one. But when you start to see those breakdowns with individual stocks, now you have a chance to really look and see if there's something fundamentally happening and try to understand. It's a little bit more difficult to do that with an overall market. Overall markets definitely oscillate more, but most stocks hit a number at some point that they never get back to. Like if you go back, like Cisco is a great example, right? Cisco took off in the 2000s. It's never been back to the levels that it hit before the internet bubble.
Yep. Yeah. And so, yeah, I appreciate that context, Phil, because I wasn't thinking to point that out. I think it's really important. Individual stocks can plummet for all sorts of reasons. Bankruptcy, you name it, individual news, whereas markets in general. Now, I will say that individual stocks do oscillate, but there's also the risk factor is higher because you can have events that have nothing to do with the market. Like, oh, this firm filed for bankruptcy. What? They weren't even close. Like, things happen, right? Or let's say Trump calls out a firm and says, you're not allowed to do business in the US anymore. Okay, that's not going to go well. So just understanding the oscillation is a really important part. This chart's pretty good. If you look here, it says, the 20% drawdown without closing below. Like this is kind of like how you look at oscillation. Like where is it in the curve? If you look at a place like Guru Focus, it will give you an oscillator for valuation. These appear everywhere. You're probably not noticing them, but look at them because you'll see if things follow a certain pattern. Then you want to make note. If something moves up too fast, like it did on, was it Wednesday? Yeah, Wednesday. If it moves up too fast, like it did on Wednesday, what happened on Thursday? It went down a lot because it went up way too fast. 10%'s a lot in a day. I would have been shocked if it went up again. Now, if Trump said tariffs are over for everyone, would have probably shot up, but he didn't. But that was really too far, too fast. So you saw Thursday, it went down a lot. Now today, I think it's up, but it's finding its new medium, its new equilibrium. And then from there, we'll see what happens. But it seems like we're in that equilibrium stage where it's up, down, but it'll kind of, that volatility will shrink. And then at some point it'll expand when something else happens. So here's some examples. This is big tech. I won't get into them, but as you can see, big tech experienced some big moves as well. But yeah, I mean, look at this. Look at that drop. Up here, drop, up, down, big drop. We're still not up to where we started. And I'm not sure if we will, but we'll find out. We'll find out. That's the important thing, right? Is we don't know the future. Anyone who says they can tell you the future is lying to you or lying to themselves. So just look at this and just say, all right, one of two things could happen. It could go up. Well, three things. Up, it could go up, it could go down, or it could go sideways. one of those three is going to happen. I don't know which one. You know, I could guess, but I got a 30% chance of getting it right, 33% chance. So anyway, yeah, I mean, look at NASDAQ. That was down 21%, I think, and that was up 12.16%. That's crazy. But yeah, here's the biggest reversal post financial crisis. That's a astronomical reversal. Here's Mag 7. If you're not familiar with the term face ripper, that's when you're in the wrong position and it goes against you. They call it ripping your face off. It's a Wall Street term for those of you who don't know. Anyway, Mag 7, 14.2% daily performance. That's nuts. Anyway, so there's just kind of a review of what happened over the past week. A lot's happened. Bonds have not done very well. Here's one more, and then we'll turn it back to Phil. Oh crap! I didn't realize we went over. We're at time. Here's the last thing I want you guys to look at. Here is municipal bonds, safe, state-run municipal bonds. Good old safe bonds. They dropped 6% in the last week. Good old safe bonds. So not everything's safe.
No, I mean, I was even looking at treasuries because I like to use those. And last week, I think rates fell on like the 5-year, because I don't usually go out longer than that right now, had fallen under 4%. And you look today and they're at 4.2.
Yeah.
And remember, when the rates go up, that means the value of those bonds is going down. Now, if you're holding the bond to maturity, I don't get as concerned by that movement, because I buy it. Like when I say 4.2, that's its yield to maturity. It's not its actual coupon rate. So that's actually a combination of the change in value of the bond plus whatever it pays in coupon. When you buy it, if you hold it to maturity, that fluctuation doesn't matter that much. But still, that's a pretty big move to go from 3.9 something to 4.2 in the space of a week. That's a pretty big move for treasuries to make.
Yep. Big move. Well, we got to wrap it up, Phil, in the interest of time. We had a lot to cover today, and we tried to get it all. We got more. We'll cover it next week. Where can people find more about you, Phil?
So my firm is Apprise Wealth Management. I know that experiencing big life transitions can be helpful. Can be stressful. My job is to help empower.
Yeah. Depending on what side you're on.
Yeah, I know. My job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm's Apprise Wealth Management. We'd love to get to know you. You can go to our website, which is apprisewealth.com, and that's APPRISE Wealth, to sign up for our weekly blog or to schedule a free introductory call. Thanks for having me today, Kirk. Definitely an interesting week.
Yeah, thanks for coming on, Phil. Glad we could share it together today. Hopefully next week is less interesting, but we'll try to make the podcast interesting. So thanks everyone for joining us. My name is Kirk Chisholm, wealth manager of Innovative Advisory Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on the show. Please remember to subscribe to the podcast and podcast app if you're choosing. You can also check out the show at moneytreepodcast.com. On the website, you'll have access to show notes, resources, and the archive shows. Also, check out our YouTube channel. When you're there, please subscribe and leave a comment. Lastly, please leave a short rating and comment to the podcast app of your choice. Oh, and don't forget, do your own research. This show is for informational use only. We're not telling you what to think, merely how to think about investing. We're also not selling any products or services, so do not consider this advice. If you have any problems with the show, I still blame Putin. Please send an email, express your feelings. If you're seeking financial advice, talk to an oracle or a fortune teller, or maybe just a licensed financial advisor. I'm one, but as I said earlier, I'm not selling anything, but I'm easy to find. Have a great week ahead, and remember, no one will care about your money like you do. So invest in your life.